Come to this lesson on IFRS, the global recognized standards for financial reporting. We will cover what is IFRS, what is the ISB, history of IFRS, features of IFRS, list of IFRS and IAS, countries using IFRS, what are the advantages of converting to IFRS. We will see also what is US GAAP. We will discover the main differences between US GAAP and IFRS. Then we see at the end the organization involved in standard setting. The aim of this lesson is to provide you a solid foundation for understanding IFRS and its role in enhancing financial communication worldwide. IFRS are accounting standard issued an independent for-profit organization called the International Accounting Standard Board, ISB. This is the board decision that sets the rule for IFRS. The goal for IFRS is to provide global framework, how public companies prepare and disclose their financial statements. IFRS provides general guidance for the preparation of the financial statement rather than setting rules for industries' specific reporting. IFRS is particularly important for international companies. They have many subsidiaries around the world. Within IFRS, they will have only one standard that they need to follow when preparing the financial statement. IFRS is progressively replacing the main different national accounting standards. Many countries now are using IFRS around the world, including the USA, also are working on converting from US GAAP to IFRS. We have said before that we have an organization called ISB, which is an independent accounting standard setting body based in London. This is the organization that they prepare the rule and the standard for IFRS. It consists of 15 members from multiple countries, including the United States. The ISB began operation in 2001 when it succeeded the International Accounting Standard Committee. The ISB contains very expert in accounting in different sectors, banking, national fund regime, that helps them to create a very powerful standard that should be followed by all the company and all the countries. The International Accounting Standard IAS were issued by the ISC from 1973 to 2000. ISB replaced the ISC in 2001, and they start to convert IAS to IFRS. We will see later the list of IAS and IFRS. ISB has adopted or proposed new IFRS. In 2002, the European Union agreed that from January 25, international financial reporting standard would apply for the consolidated account of European listed companies, bringing about the introduction of IFRS to many large entities. Other countries have followed the lead of the Europe. Financial statements come in various shapes and sizes, but they have all certain features in common. Information in IFRS financial statement has three characteristics: relevance, that is make difference to the decision about the company made by user of the financial statement. Financial statements are complete and free from bias and error. Ensure comparability when we look to the financial statement from period to period and from two companies in the same industry. Different people could reach the same decision based on the information, but not necessarily reach complete agreement. Make information available to user in good time. Understandability, present and classify information clearly and consistency. We have a list of international financial standards. As we said before at the beginning, there was International Accounting Standard from 1 to 41. This is the list, and most of them, they are replaced by IFRS. So the first one, IS1, presentation of financial statement. In this standard, show how to present the financial statement, balance sheet, income statement, cash flow statement. 2 is deal with the inventories, how to measure the inventories, what are the accounting treatment for stock, does LIFO, FIFO acceptable or not. Then IS7, cash flow statement, how to present the cash flow statement. IS8, accounting policies, changes in accounting estimate and error. We get all the information when there is error in accounting, how to manage accounting estimated and error. Event after the balance sheet date. This is IFRS 10. This is how to deal when we close the account at the end of the year. After that, we get information that may impact the financial statement for the last year. However, we are not able to correct our financial statement now. In this standard, we see how to do the necessary transaction. ES 11, construction contract. So this is how to deal with a long-term contract. This is replaced by IFRS 15. We will see that later. Incomes taxes. This is how to deal with income taxes. Statement reporting. IAS 16, property, plant and equipment. What is fixed property, plant and equipment? What are the depreciation method allowed and different valuation for the fixed asset? Yes, IAS 17, lease. This is also replaced by IFRS 16. Revenue recognition. This is also replaced by IFRS 15. Employee benefits. Accounting for government grant and disclosure of government assistance. Effect of change in foreign exchange rate. Borrowing cost. How to calculate the cost of borrowing. Related party disclosure. Accounting and reporting by retirement benefits plan. 37, consolidated and separate financial statement. Investment in association. This is all the topics that we can find in the IAS. Then, starting from 2001, it's come to convert to IFRS. So this is a new standard that are replacing the EIS. The first IFRS 1, which is first time adoption of international financial reporting in 2008. IFRS 2, share-based payment, business combination, insurance contracts. IFRS 5, no current assets held for sales and discontinuous operation. This is all the standard that show step by step how to deal with accounting. IFRS 15, very famous one, revenue for contract with customer. Then there is lease. And IFRS 17, insurance contracts. Mainly all the countries that are using IFRS, it's more than 140 countries across the world that are using IFRS. When we adopting IFRS, a business can present its financial statement on the same basis as its foreign competitors, making comparison easier. Some companies have many affiliate companies across the world, so this is the comparison and the preparation for the financial statement will be easy for those companies. Companies may also benefit by using IFRS if they wish to raise capital abroad. Now we have USGAAP, generally accepted accounting principle, is the accounting standard adopted by US Security and Exchange Commission, SEC. So in the USA, they adopt USGAAP. US law require business that releases financial statement to the public and companies that are publicly traded on stock exchange and indices, and this is to follow USGAAP guideline. So all the company that located in USA or they listed in the stock exchange in USA, they need to provide their financial statement on USGAAP. The accounting standard codification ISC is the development and maintained by FASB. The financial accounting standard board, FASB, is the only authority source of US GAAP. So there are some major differences between US GAAP and IFRS. US GAAP current assets are listed first, while balance sheet preparation and IFRS begin with a no current asset. For the US GAAP, they start with the cash and cash equivalent. This is start by liquidity. That means the most liquid asset will be first shown in the balance sheet. Example, we have cash and cash equivalent. Then we have account receivable because we invoice the customer and we haven't yet received money. It will be converted to cash quickly. Then there is inventory, then long-term fixed asset. For the cash flow statement, there are some differences. Example, interest paid and the US GAAP will be part of operation section. In the IFRS, it will be on the operation or financing section. Dividend paid and the US GAAP, they call it is financial section. Then in IFRS, while in IFRS, it's considered as operation or financing. Interest received in the US GAAP is part of operation section. And IFRS, it can be either operation or investing section. Dividend received, it will be part of operation section in the US GAAP. For the IFRS, it's operation or investing section. For the inventory valuation methods, in the US GAAP and the US GAAP, all the inventory valuation methods are permitted, while IFRS allow for FIFO and weighted average method to be used, and LIFO is not permitted under IFRS. Those are the organizations involved in the standard setting. We have SEC, which is American organization. We have Financial Accounting Standard Board, FASB, that set the US GAAP standard. Then we have International Accounting Standard Board, ISB, which is organization to set IFRS rules.